What if one single decision could completely change the global financial system overnight? Imagine waking up one day and realizing that money, as we know it, is no longer backed by trust alone, but by something real, something physical: gold. Now imagine this shift happening suddenly, quietly, and in a way that most people don't even notice until it's too late. This is not just another theory. This is a possibility that could reshape economies, destroy old systems, and create massive opportunities for those who understand it early. Welcome to Gold Silver Scope, where we break down complex financial shifts into simple ideas so you can stay ahead. Today, we are going to explore a powerful concept that could explain why gold may become the center of the global financial system once again. There has been a growing discussion in financial circles about the idea of returning to sound money. In simple words, sound money means currency that is backed by something real, like gold, instead of just government promises. The idea being discussed is very bold. Instead of traditional bonds that pay interest in dollars, there could be a system where bonds are tied directly to gold. Let's simplify this. Right now, when governments issue bonds, they borrow money and promise to pay it back with interest in their own currency. But in this new idea, bonds could work very differently. Imagine a bond where instead of earning interest every year, you are promised repayment in gold at the end. That means no regular interest payments, or maybe very low interest, but the final value is linked to gold itself. At first, this sounds unusual. Why would anyone accept zero interest? But think deeper. If gold keeps increasing in value over time, then the real return is not coming from interest. It's coming from the rising price of gold. So instead of earning small interest payments, investors could benefit from a much larger gain in gold value. Now let's take it one step further. If a government issues such bonds, it gets money upfront without paying heavy interest costs. This means it can spend more freely in the present, especially on big goals like rebuilding industries, improving infrastructure, and bringing manufacturing back into the country. In simple words, it gets cheap funding today and promises gold in the future. But here's where things get really interesting. If the value of gold rises significantly over time, then the amount of gold needed to repay that debt actually becomes smaller in terms of ounces. So even though the government promises gold, it may end up paying back less in real terms if gold prices go up sharply. This creates a powerful incentive. If policies lead to currency weakening and gold rising, then the system starts working in favor of the issuer of that bond. At the same time, investors are also happy because they are holding something tied to gold instead of a weakening currency. Now ask yourself this question. What happens if the global system starts losing trust in paper currencies? Right now, the entire financial system is built on trust. People accept money because they believe in the system behind it. But if that trust starts to break, even slowly, then the demand for real assets like gold increases. And when demand increases, prices rise. This is where things connect. If gold becomes the foundation again, even partially, then it changes everything. It changes how countries trade, how debts are settled, and how wealth is stored. Instead of relying only on paper money, the world could slowly move toward assets that cannot be printed. And that brings us to a critical point. If such a shift is already starting behind the scenes, then most people are not prepared for it. They are still thinking in the old system, saving in currencies that may lose value over time, while the smart money quietly moves into real assets. This is not about panic. This is about awareness. Because in every major financial shift in history, the people who understood what was happening early were the ones who benefited the most, and those who ignored it were left behind. Now let's take this idea further and understand how this system could actually play out in the real world. Imagine a government issues a very large bond, let's say for millions or even billions of dollars. Normally, this bond would require regular interest payments, which becomes a heavy burden over time. But in this new model, the bond has little to no interest. Instead, the repayment is tied to gold at the end of the term. At first glance, it may look like the investor is sacrificing income, but in reality, the investor is making a different kind of bet. They are betting that gold will rise in value over time, and if that happens, their return could be far greater than traditional interest. Now here is where things become very powerful. If gold prices start rising significantly, the system starts benefiting both sides. The investor sees their gold-linked return increase. At the same time, the issuer, meaning the government, benefits because the real burden of repayment becomes easier in terms of purchasing power. Let's simplify this with an idea. If today a bond is linked to a certain amount of gold, and in the future gold becomes much more valuable, then fewer ounces of gold are effectively needed to represent that same value. This creates a situation where debt becomes easier to manage over time, especially if the currency itself is losing value. And that brings us to the next major point: currency devaluation. In today's system, currencies can be printed in unlimited amounts. Governments can increase money supply whenever needed. While this helps in the short term, it slowly reduces the value of money. Prices rise, purchasing power falls, and people feel that everything is getting more expensive. Now think about gold. Gold cannot be printed. It cannot be created out of thin air. Its supply grows slowly over time. That's why, historically, gold has been seen as a store of value. When currencies weaken, gold tends to rise. So if a system is designed where gold plays a central role again, then rising gold prices may not be a problem. It may actually be part of the plan. Now let's connect this to a bigger global picture. For decades, one currency has dominated global trade and reserves. Countries around the world have relied on it for transactions, savings, and stability. But over time, cracks have started to appear. Debt levels are rising, trust is being questioned, and more countries are exploring alternatives. If this trend continues, then the world may slowly move toward a system where no single currency dominates completely. Instead, countries may rely more on their own currencies and settle differences using neutral assets like gold. And this is a key shift, because when countries settle trade in gold or gold-linked systems, it reduces dependence on any one nation's currency. It also forces countries to maintain stronger financial discipline, because they cannot simply print gold. Now think about what this means for gold demand. If governments, institutions, and even financial systems start increasing their exposure to gold, then demand rises significantly. And when demand rises faster than supply, prices move higher. But here is something even more interesting. What if the rise in gold prices is not just natural, but supported indirectly? There is a possibility that large financial players, institutions, or systems could be accumulating gold quietly over time, not in a way that creates panic, but slowly and steadily. This allows them to build reserves without attracting too much attention. At the same time, if financial structures are created that channel money into gold indirectly, then demand can increase even further without the public fully realizing what is happening. This creates what we can call a hidden flow into gold. Money moves through different channels, earns returns, and eventually finds its way into gold accumulation. Over time, this builds a strong foundation for a gold-backed or gold-influenced system. Now ask yourself this: if such accumulation has already been happening for months or even years, what does that mean for the future price of gold? It suggests that we may still be early in the process, because once the shift becomes obvious to everyone, the biggest moves may have already happened. Prices don't wait for the majority. They move ahead of the crowd. And this is where awareness becomes your biggest advantage. Now let's zoom out and look at the global picture, because this is where everything starts to connect. For a long time, The world has operated under a system where one dominant currency controlled global trade. Countries earned that currency, saved it, and used it for international transactions. In return, they trusted the system behind it. This trust was the foundation of everything. But today, that trust is slowly being tested. Many countries are beginning to question whether relying too much on a single currency is safe. They have seen how policies, sanctions, and money printing can affect the value of that currency. And because of this, they are starting to explore other options. One of the biggest changes we are seeing is that countries are now trading more with each other using their own local currencies. Instead of always using one global currency, they are saying, "You use your currency, I use mine, and we'll find a way to balance things out." But this creates a new challenge. What happens when one country doesn't want to hold another country's currency? This is where gold comes in. Gold is neutral. It is not controlled by any single country. It has been trusted for thousands of years. So when two countries trade and don't want to rely on each other's currency, they can settle the difference using gold. This idea may sound simple, but it is extremely powerful. Because if more countries start using gold to settle trade imbalances, then gold becomes more important in the global system again, not just as an investment, but as a real settlement asset. Now think about this shift carefully. If countries are using their own currencies for trade and using gold as the final settlement, then the demand for gold increases globally. Every country would want to hold enough gold to manage its trade balances. And when demand increases at a global level, prices don't just rise slowly, they can move very aggressively. But there's another layer to this. Many regions are now building their own financial systems, payment networks, and trade alliances. These systems are designed to reduce dependence on traditional global structures. Instead of relying on one central system, they are creating multiple pathways for trade and finance. And in many of these systems, gold plays a quiet but important role. It acts as a backup, a neutral reserve, a way to settle disagreements without relying on trust in another country's currency. Now let's connect this back to trust. The current financial system works because people believe in it. But once trust starts to weaken even slightly, the system becomes unstable. People begin looking for alternatives. And history shows that when trust breaks down, money moves toward real assets. Gold is at the top of that list. Because unlike paper currency, gold does not depend on promises. It does not rely on policies. It simply exists, and its value is recognized globally. Now imagine a world where multiple countries are slowly moving in this direction at the same time. They reduce reliance on external currencies. They build their own trade networks, and they increase their gold reserves to support this system. This is not a sudden change. This is a slow shift. But slow shifts can lead to massive outcomes, because by the time the majority of people realize what is happening, the system has already changed. The foundation has already moved. And here's the key point you need to understand. This shift does not require an official announcement. There doesn't have to be a headline saying, "The system has changed." Instead, it happens quietly, step by step. Trade agreements change, reserves change, settlement methods change, and before you know it, the world is operating differently. Now ask yourself this question. If gold is becoming more important in global trade, and if countries are preparing for a system where trust in currencies is lower, then what happens to individuals who are holding all their wealth in paper money? This is where things become personal. Because while governments and institutions prepare for these changes, most individuals are not paying attention. They continue to save in currencies that may lose value over time, without realizing that the system itself may be shifting. And this is exactly how wealth transfers happen, not suddenly, but gradually, from those who don't understand what's happening to those who do. Now let's bring all of this down to real life, because at the end of the day, this is not just about systems, policies, or global trade. This is about how these changes will affect you, your money, and your future. If the world starts moving toward a system where gold becomes more important and currencies slowly lose strength, then one of the first things people will notice is rising prices. Not just normal inflation, but a deeper shift where the purchasing power of money keeps falling over time. You may already be seeing signs of this. Every year, things feel more expensive. Groceries, fuel, housing, basic necessities, everything slowly costs more. But this is just the early stage. If the system continues in this direction, the gap between income and expenses could grow even wider. Now think about why this happens. When more money is created in the system, but real goods and services do not increase at the same pace, prices naturally rise. But if, at the same time, countries are trying to rebuild their industries and reduce dependence on imports, then there may be a period where goods become even more expensive. Why? Because cheap global supply chains may no longer work the same way. For years, many countries relied on importing cheap goods from around the world. This kept prices low and allowed people to enjoy a higher standard of living. But if the system shifts toward local production and manufacturing, costs can increase in the short term. This means we could enter a phase where goods are not only more expensive, but also less available at times. And that creates pressure on everyday life. Now here's another important layer. Technology, especially automation and artificial intelligence, is rapidly changing the job market. Many tasks that were once done by humans are now being handled by machines or software. This increases efficiency, but it also reduces the need for certain types of jobs. So at the same time that prices may be rising, job stability could become more uncertain for many people. This creates a very difficult situation. Higher cost of living, combined with changing job opportunities. And this is why some people believe there may be a transition period where governments introduce support systems to help people adjust. But even with support, the reality is that the economic environment could feel very different from what people are used to. Now let's connect this back to gold and assets. In times of uncertainty, wealth tends to move toward things that hold value. Not promises, not paper, but real assets. This includes gold, silver, and other tangible stores of value. Why? Because when currencies lose strength, assets often rise in price. This is something that has happened again and again throughout history. Those who hold assets tend to protect their wealth. Those who rely only on cash often see their purchasing power decline. And this brings us to a very important concept. There is something known as the flow of money. When new money enters the system, it does not reach everyone at the same time. It flows through certain channels first. Institutions, large investors, asset holders. These are the people who benefit early. They buy assets before prices rise. By the time the money reaches the average person, prices have already increased. This is why the gap between rich and poor often grows during periods of inflation, because those who understand the system position themselves early, and those who don't are forced to react later. Now think about where we are today. We are at a point where multiple major shifts are happening at the same time. Currency systems are under pressure. Global trade is evolving. Technology is changing jobs. And real assets are gaining attention again. This is not a normal cycle. This is a transition. And during transitions, the rules change. The strategies that worked in the past may not work the same way in the future. Saving only in cash, relying on old systems, and ignoring global trends can become risky. But at the same time, these transitions create opportunities. Because when systems change, new paths open up, new ways of thinking emerge, and those who adapt early can position themselves for the future instead of being left behind. Now the question becomes very simple. What should an individual actually do in such a world? Not from a place of fear, but from a place of awareness. Now the most important question of all, What should you actually do? After understanding all of this, it's easy to feel overwhelmed. Big systems are shifting, currencies may lose value, and the future can look uncertain. But this is exactly where most people make a mistake. They either panic or they ignore everything completely. Both approaches are dangerous. The smart approach is simple. Stay aware, stay prepared, and think long-term. First, understand one basic truth. Wealth is not built by reacting late. It is built by positioning early. The people who benefit the most in any financial shift are not the ones who move fast. They are the ones who move early with the right understanding. So instead of asking, "What will happen tomorrow?" a better question is, "Where is the world heading over the next 5 to 10 years?" And from everything we've discussed, one direction is becoming clear. The world is slowly moving toward real assets. This does not mean everything will change overnight. It does not mean currencies will disappear. But it does suggest that relying only on paper money may not be the safest strategy over time. So what can you do? Start by thinking in terms of value, not just numbers. Holding money in a bank may feel safe, but if its purchasing power is falling every year, then in reality, you are losing value slowly. On the other hand, assets like gold and silver have historically preserved value over long periods of time. This is why many experienced investors focus on balance. They don't put everything in one place. They don't rely only on one system. They spread their risk across different types of assets so they can stay protected in different scenarios. Now, this is important. This is not about going all in on anything. It's about understanding the direction of the system and adjusting accordingly. Even a small shift in mindset can make a big difference over time. Instead of saving everything in cash, you start thinking about owning things that hold value. Instead of chasing quick profits, you focus on long-term stability. Instead of following the crowd, you begin to think independently. And most importantly, you stay informed. Because information is your biggest advantage. The world is changing, but most people are distracted. They are focused on short-term news, daily noise, and temporary trends. Meanwhile, the real shift is happening quietly in the background. And those who pay attention win. Now let's talk about mindset for a moment. There is a very fine line between fear and awareness. Fear makes you freeze. Awareness makes you prepare. You don't need to believe that everything will collapse. You don't need to think the world is ending. But you do need to accept that systems evolve, and those who adapt are the ones who move forward. Think of it like this. If you see a storm coming, you don't panic. But you also don't ignore it. You prepare, you adjust, you protect yourself. This is the same idea. Now here's something very important to remember. Every major shift in history has created winners and losers. The winners were not always the smartest people. They were the ones who understood what was happening and took action before it became obvious. So your goal is simple. Understand the shift. Stay calm. Position yourself wisely. If you do that, you are already ahead of most people. And if you want to continue understanding these kinds of deep financial shifts in simple and clear language, then make sure you stay connected with Gold Silver Scope. This channel is all about helping you see what others are missing, so you can make better decisions for your future.